Happy May 17th, everybody. Let's take a look on this market and once again the importance of one tick making a world of difference. One tick to the point of entry. Stop limit orders 95% of the time, traders, with bracket orders appropriate for your account size. We've been dealing with massive correction this morning. Finally, key level is reached. The moment key level is reached, S&P moving in the right direction. Let's take a look on the market as we're monitoring Fibonacci targets to the upside. This is the market this morning. This is complete panic and complete chaos. Where's the best point of entry coming from? Key trend inception. This is pretty darn dangerous market, traders. It's ultimate correction on hourly. This is the levels you use for your entries on any chart you will choose to trade. Do you trade 5? Why not? You know where support is? Monitor for long. You trade 15? Why not? You know where support is? You never short into. As we discussed since early this morning, shorts not an option. This is a chart that's been present in the trading room since early May. Market been in quite a lot of pain this week because we've been dealing with overextended rally. Yesterday morning, finally key Fibonacci support in a play. This morning we are drastically higher, and that's quite typical. However, once again we are on the right side of the market. Problem is overextended bullish rally. Problem is we're not in pretty place in the market. Knowledgeable trader knows that. Overextended bullish rally with weak buyers and weak sellers, not a good place for day trader to be. Quite a pickle we are dealing with this morning. What's important to remember? Buying at trend inception with institutions is a beautiful place to be. Dealing with overextended bullish rally is a problem. However, if you know where Fibonacci levels are, if you know extremely well that shorting near key Fibonacci support not an option, and you play by the rules, the sky's the limit. No matter what chart you trade, no matter what time frame you trade. So let's pay attention to Fibonacci targets to the upside, and while we're monitoring S&P with key Fibonacci targets to the upside, knowledgeable trader knows how dangerous this structure is. In the meantime, let's recap and review few our favorite examples. Here's a question I've been asking a lot about CRK. CRK is a stock Jerry Jones purchased. Do you remember this key Fibonacci support present in the room for months? This stock more than doubled. Where did the bullish rally came from? Fibonacci support. Identical dense as on S&P this morning. Remember what we discussed? Shorts are not an option. CRK and S&P are twins this morning. What is absolutely crucial to pay attention to? The response to the upside in this area. What you're witnessing in front of you every day is 10 years of work with Fibonacci, 8 years of work with students, from beginner to hedge fund manager who taking the course in US and globally. Pretty darn dangerous market this week. However, once again we are at the right place at the right time. Identical level where S&P is this morning, is exact same dance Apple had done prior to earnings. Do you remember this? Apple at Key Fibonacci Support. Do you remember what we're discussing? My bias is bullish. If you missed that date, if you missed that time, pretty please review videos on the website and blog. This is Apple this morning, after earnings. Apple no longer at Key Fibonacci Support. Apple currently at 187. If you know where Fibonacci support is, you never short near. You monitor for reversal. And here is S&P this morning. Knowledgeable trader knows extremely well how crucial this moment is. Price is blasting through this level, bullish rally will be spectacular. However, this is a main obstacle, not to be ignored. Knowledgeable trader right now protecting his profits, moving his stop outside of break even, taking some profits off the table, knowing quite well this is key moment on S&P. Scaling out of his position is a key. This is exact same dance we witnessed in the trading room yesterday morning during oil news. In case you missed oil news, let me remind you. This was oil yesterday morning. We were at key support. What was the problem? This key resistance. How many hours did it take oil to break through this key resistance? Many. Where does a knowledgeable trader buy? From key support. Look at oil after oil news. If I convert this chart to 15-minute chart so you can see hours. Bullish news and oil in pain for the next 4 hours. And skyrocketed to this key resistance as expected. Knowledgeable trader watching this exact same structure on S&P this morning. All the same formula. All the same strategy. Once again, we are on the right side of the market. That's the reason hedge fund managers taking a course. Right now we are at key target on S&P. After this, I'm closing trading room. Why? Because in the course you learn sniper's mentality. In the course you learn not to waste the most important commodity in life, time. Right now price can crash and burn. Knowledgeable trader knows that. Knowledgeable trader knows that we are not far off at institutional resistance. And that's the dance on S&P this morning. And that's ultimate reminder. If you play by the rules, the sky's as a limit. Shorts had not been an option, no matter what chart you trade. No matter if it's 5, 6, 7, 11, 10, 15, range tick chart, Fibonacci will always keep you on the right side of the market. Every day, every time, exact same formula. And that's the market this morning. Price did not retrace to our key support. Price gave us only this. You don't need anything else. What you need is to play by the rules. The sky's as a limit if you do. So again, this is a key Fibonacci target, the most important rule you learn in the course in a play right now. Disrespecting it as your key second target, not an option. As I warned you, right now price can collapse all the way back down to 27.14. There is no random stop, there is no random target. Every single stop, every single target based on proprietary Fibonacci rules you learn in the course. Trading room this month's been open less than 18 hours. This is trade number 12. This is the moment knowledgeable trader adjusting his trail right outside of this key support. 90% chance price will collapse completely as we know it. Knowledgeable trader not giving away his profits. And that's how you trade Fibonacci, traders. And that's only Fibonacci will give you this much accuracy. Nothing else ever will. So here are a couple of students posting their results. Here's Ken, 5 lots, 4 points. Here's Pablo, beginner trader, complete beginner trader, 4 points, 1 lot. Every single student different lot size. Every single student trades different chart, different time frame. Every single student identifies what trade appropriate for his account size. And that's trade number 12 this month. Reached key 2 Fibonacci targets. As you witnessed in counter trend move, decision point 1 only target. This time around price came very close to decision point 2. And I spelled out clearly, it is key target. What account size you trade, what lot size you trade, absolutely up to you. If you would like to join us in the course, pretty please review the information on the website. We start from scratch on May 21st. All classes are live, group classes 8 weeks, private mentoring 16. Of course, Johan, you can. And here's the advice from Jean, who closed vertical put spread option from yesterday, 15 points, 5 lots. You want to trade like Jean? You want to trade like Pablo? You want to trade like Ken? Join us in the course. Listen to students and graduates on the website. And never hesitate to contact me. 925-257-4298 or info@fibinstitute.com. In the course you learn sniper's mentality. In the course you learn to trade any instrument, any time frame, any platform you choose. Thank you traders, thank you so much for your time this morning. Alphys, let's go into trade recap early this morning. Thank you traders. Room will reopen on Monday.